Ladies and gentlemen, good day and welcome to the Styrenix Performance Materials Limited conference call. We have with us today from the management of Styrenix Performance Materials Limited, Mr. Rahul Agarwal, Managing Director, Mr. Munjal Parekh, Head of Accounting and Reporting, and Mr. Abhijat Sinha, Head Legal and Company Secretary. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Munjal Parekh. Thank you, and over to you, Mr. Parekh.
Thank you. Dear all, good afternoon. We welcome you to this earnings call. The company Styrenix Performance Materials Limited has declared its results for the quarter and half year ended September 30, 2023 on October 20, 2023. About quarterly performance, July to September 23 versus April to June 23. The operational revenue for the quarter is INR 595 crores versus 543 crores. EBITDA is INR 86 crores versus 53 crores and margin stands at 14.4% versus 9.7%. The net profit before tax is INR 76 crores versus 43 crores and the margin is 12.8% versus 7.9%. Profit has improved over the previous quarter due to higher sales and effective cost management. About half yearly performance, April to September 23 versus 22. The operational revenue for the half year, April to September, is INR 1139 crores versus 1199 crores. EBITDA is INR 139 crores versus 170 crores and margin stands at 12.2% versus 14%. The profit before tax is INR 119 crores versus 148 crores and margin is 10.5 versus 12.3. These are brief details about the financials, and now we can take your queries. Thanks.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We also request that you please restrict your questions to 3 questions per participant. You may rejoin the queue for follow-up questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirali Gopani from Unique PMS. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on very good results and announcing the new growth capex also. So my first question is that in our presentation we have given capacity numbers till FY28, which roughly indicates a growth in capacity of about 25%. So my question is, can we do a similar level of growth on the revenue side also?
Thanks, Nirali. This is Rahul Agarwal. Thanks for your question. So essentially the pricing of the products will determine the revenue. What we have given are volume numbers. The pricing of the products typically tracks along with the raw material pricing and the market pricing of the products at that time. But if one was to consider current pricing as normalized basis, taking that assumption, yes, the revenue would also increase in the similar manner, the capacity would increase.
Okay, perfect. And Rahul, you had also guided for a target EBITDA margin of 15%, and we are very close to that number when we see this quarter's result. So were we conservative when we said 15%?
I have never given any indication of target EBITDA margin of 15%. However, I have mentioned earlier as well in all my calls that we need to come to a normalized basis for EBITDA margins, which is achievable in the company using measures such as better capacity utilization, having a better product mix, improving cost efficiencies wherever possible, and we are doing all that we possibly can, and there is still work continuously going on to improve on that front.
Okay. Okay. And lastly, Rahul, so currently we have a gross block of about 530 crores and we do a revenue of about 2,300 crores on an annual basis. So when we say a capex of 650 crores, what kind of asset turn should we assume?
So if you're assuming, the assumptions being that you will be able to the similar pricing as an assumption and keeping revenue 3 times, I think you can calculate the asset turn based on that additional revenue that would be generated from that capex.
Perfect. Thank you so much, Rahul, for answering my questions.
You're very welcome.
Thank you. Ladies and gentlemen, you may press star and 1 if you wish to ask a question. The next question is from the line of Jayesh Gandhi from Harshad Gandhi Securities. Please go ahead.
Congratulations on this set of numbers, sir. So my question is regarding, can you throw some light on the industry growth? I mean, I'm seeing it all your competitors announcing capexes. Most of them are running at 100% capacity. Any competitive landscape, and all the more when you are saying that you are increasing your, enhancing your capacity, it is more towards specialty. And if yes, then can we think that in future, currently our material cost is closer to like 80-85% of our sales. Can we gravitate it downwards towards 60 or 70%? I mean, can we increase our EBITDA margin in that case?
Is that all, Mr. Gandhi?
Yeah. That's all. I'm sorry.
Okay. With regards to competitive landscape, there is the sectors that we currently sell our products into include automotive, household, consumer durables, electronics, medical devices, toys, stationery, and many sectors, many other sectors as well. All the sectors, have a fairly robust growth, and the outlook for the next, 3 to 5 years is also fairly robust growth. Currently, if we break up the polystyrene as well as ABS market, the ABS market is between 2.5 and about 1.5 lakh tons. Thus far had been serviced by the local incumbents. Assuming a 7 to 9% kind of a growth rate is what we are assuming based on the growth rate of the target industries, which information has been provided to us. We believe that there will be ample opportunity for us to participate with the added capacities, as those additional capacities come online, and enough opportunity for us to still remain at fairly fully utilized kind of capacity levels once those capacities are added on. Polystyrene also similarly, we have announced capacity augmentation from where we are at, and there also there is current imports which are happening, and we believe that again with the downstream growth in the segments where we participate, we assume that we shall be able to have kind of fully utilized capacities in that case as well. As far as your question on material cost is concerned, I think material cost is around 73-74%. It's not at 85%, but it's around those numbers. We assume that currently this is a normalized situation. There will be, of course, an effort to improve the product mix, thereby reducing your material cost as a percentage of sale value. However, that will be a gradual process, and I cannot comment whether that would come down to a level of 65% as of now.
Okay. So when I was looking at 2 of your competitors who are increasing the capacity, looks like by next 4 to 5 years probably, we will reach at around 6 lakh ton per annum production in India itself. And you are just saying that from 2,70,000 to 7% annually, we will grow at what, in next 4 years only 4 lakh tons of demand. So in that case, will there not be glut?
Can you please explain the breakup of the 6 lakh tons?
So Styrenix is looking at from 85,000 to 2,10,000.
Right.
Supreme is looking at 1,40,000.
Okay.
Concall yesterday announced from 75,000 to 1,45,000.
Okay.
So looks to me like okay. I'm missing out. It should be closer to like 5 lakh tons.
Right. I think I cannot actually comment on the competitor's CapEx plan. However, with Supreme, I think you need to relook at when phase 1 and phase 2 is coming online, and also you have to consider the timeline in which the entire capacities will be added on. If you look at total market being between 2.5 to 3 lakh tons and an average growth rate of 7 to 9% year on year, actually the math does work out. Where there is not, too much of excess capacity in the market, because we are looking at a next 3 to 4 year horizon where additional about 1.5 lakh tons additional demand will also be generated in the market.
Okay, and one last question, sir. Any discussion in the management to bring down the debt of promoters? I mean, not the debt, sorry, pledge.
So that is a separate conversation. We are working on that, and the promoter has its own strategy to take care of it. However, any of the promoters' pledges have no recourse to the company of Styrenix or its balance sheet. So there is not a concern for any of the shareholders.
Okay, that's all from my side. That's all.
Yeah.
Thank you. The next question is from the line of Pratik Banthia from Eric Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah. So I just had a couple of questions. The first one being, what is the incremental demand size that you see from the IT hardware manufacturing opportunity that would come up in India? And the second question is, what are the threat of imports in the both products that you manufacture, namely ABS and PS? That's it. Thank you.
I'm sorry, can you repeat your second question again?
Threat of imports in the products that we manufacture.
Okay.
Yeah.
So as far as IT hardware is concerned, government has announced its clear intention that it would like to have more and more manufacturing within India. We do believe that with the government's intention and of course the demand of the end sector in India, there will be more manufacturing in India so long as the right ecosystem does develop over a period of time. And we do believe that will eventually also be a good growth driver for the use of our products. So we shall wait and watch as that unfolds, because currently the products that we supply into IT hardware is a smaller component, and we'll have to see how that pans out over a period of time. We do believe that the existing segments that we cater into are also growing at a robust pace, which will allow us at least to have a good demand for our products in the future. As far as threat of imports is concerned, we do believe that, again, breaking this into two parts, ABS business as well as polystyrene business. On the ABS business side, we have a good position with the market and with the customers, where our brand is the preferred brand. Most of the producers or customers in India would prefer a locally produced product, so long as the local product is available and the capacities are there. So that has been obviously also our first intention, is to first debottleneck and try to maximize the capacity that we can produce, and also to now, of course, we have announced what we intend to do going forward as well in terms of capacity augmentation. So I think we are well positioned to cater to the demand which is already present in India as far as all of our products in ABS is concerned. Even in polystyrene, we do believe there is going to be a significant demand which is going to come from some specific sectors such as air conditioning market, refrigerator market, also in toys and other areas. We do believe that there will be ample demand growth where local production will be preferred, and we will be in a good position again to cater to that demand. In terms of threat of imports, that will always remain, because we live in a fairly globally transparent world where how demand supply scenarios pan out in other parts of the world would affect us. But I think we are placed in a strong position to undertake any challenges that come our way.
Oh, thank you so much.
Thank you. The next question is from the line of Nihar Shah, an investor. Please go ahead.
Hello.
Yes, Nihar.
Yeah. So in the last, we have good growth rate. So is this growth sustainable?
Sir, sorry to interrupt, but you're not very clear. I request you to please speak closer to the mic.
Hello.
Yes, please go ahead, sir.
Yeah. I was saying that in the last few quarters, we have seen a growth rate. So going down the line, do we see the sustainability in the growth, or do we expect to cross that growth rate?
Nihar, thank you for your question. Like we have mentioned earlier, so the demand in India, where we primarily cater to, does exist. Currently, the total production in India is not catering to the entire demand which is existing in the country. So long as we are able to augment our capacity and produce quality products which is meeting the demands of these customers, we do not see any problem in us being able to capture more of the market. In addition, the overall market will also increase because that is increasing in relation to our GDP, it's increasing in relation to our consumptions, and also increasing in relation to all the specific sectors that we are catering to, whether it is automotive, whether it is household, consumer durables, electronics, medical devices. All these other sectors are also witnessing robust growth. So our own sense and judgment is that for the foreseeable future, there will be good growth in India, for the Indian consumption, potentially even as an export hub, and that in turn will mean a good growth for the overall industry and also for us.
Okay, and one more question.
I'm sorry, Nihar, you are not audible. Can you please repeat that?
Yeah.
Nihar, the line for you is not audible at the moment. You're not very clear. I request you to please move to an area with better network.
Hello.
Yes, Nihar.
Yeah, I was just asking that is there any particular factor which will
sorry, once again, Nihar, the line for you is not clear. You're not audible clearly.
Hello.
Nihar, you're not audible. I request you to please reconnect with this conference and ask your question later on.
Okay.
Thank you. The next question is from the line of Yogesh Bhatia from Sequent Investment. Please go ahead.
Sir, I have two questions. One, I want to know what is our annual envisaged capex for the next 2-3 years? And secondly, how sustainable are these margins, do you think? And why, maybe, if you can throw some light on that?
Thanks, Yogesh, for your question. We have, in our recent declaration as well as announcement that we have made, we have estimated a certain cost associated with the capex that we are planning for the growth phase, next growth phase of the country. However, for the company. Now, in terms of, this is an overall capex number. We are carrying out engineering studies to fine-tune those numbers. Once those engineering studies are completed, we'll have a better idea. And we'll also have a better idea of the exact timelines on how the capex will be carried out, and how in which year exactly that will be done. So that still remains to be fully mapped out. However, we have given a number of around 650 odd crores, which will be required for the entire capex, wherein we will move ABS capacities currently from 85,000 tons per annum to 210,000 tons, and polystyrene from 66 to 150,000 tons. So we do believe that capex would be spent in the duration of the project that is anticipated, which is the next 36 to 48 months. In terms of margins, sustainability, we do believe that again, going back to both the businesses, that we are a preferred supplier in the country. So long as the capacity is in place, we would be able to meet good sales numbers. Having higher sales or better asset utilization is going to be key. Secondly, as we are doing most of the projects are brownfield or are augmenting existing infrastructure, existing capacities with a lot of it being existing infrastructure. Hence, our fixed costs would get diluted to some extent. Our efficiencies would improve, and any kind of margin pressures would also get then offset by some of the benefits we would see on those fronts. I think net we do see that the margins should be sustainable in the business.
Okay. Thank you, sir. That's clear.
Yeah.
Thank you. We have the next question from the line of Naitik from Sequent Investments. Please go ahead.
Yeah, thank you for the opportunity, sir, and congratulations for the good set of numbers. So just to reiterate on the questions of the previous participant. So, I wanted to understand how susceptible are our margins to the international polystyrene prices in the very short term, and are we more secure compared to our peers because of our better product mix or something like that?
Thanks for your question, Naitik. I won't comment on as to our competitors, but as far as our own polystyrene is concerned, we do believe that we have certain inherent advantages in the product mix that we have. We are also targeting more OEMs as we go along. We have been able to produce more polystyrene in this last year than probably the last decade, and we have proved to be a far more reliable supplier. Once we have taken over management in the last 1 year for the entire market, and we see a lot more acceptability from key reliable large OEM customers. So this is going to help us going forward as well, where again the preference is to buy local. As you know, government has come out with a lot of PLI schemes where there is a lot of manufacturing of consumer durables and other products, other sectors where our products go in, and there is a clear push on part of all of these customers to buy more locally rather than import raw materials. So I think in spite of global pressures, we'll be well placed, because there will be some preference given to us. Of course, we cannot escape what happens globally, and there will be some pressure on account of that. But we definitely are placed better than companies globally.
So just to add to that, so we have seen traditionally this business, it involves a very wide swing in margins in the short term. So do you think that from here on, with the step that you have taken and the foresight that you have regarding the market, the delta of these margins going forward will not be as wide as they used to for the company?
So, I can't completely comment on what was done earlier when we were not in management control. But we do believe, and what we understand is, the last few years, you can say 21 and 22, those years there was, of course, kind of an upcycle for a lot of products, including the products of this company, where the margins were unusually high because of demand-supply gaps and supply chain issues internationally, during COVID. However, that has lapsed and that period has passed, and what we see today is more of a normalized kind of a situation. We do believe with the measures we are taking that we should be able to effectively, control our margins and keep on trying to improve it.
Okay. Thank you so much, sir. That will be all.
Very welcome.
Thank you. We have the next question from the line of Utsav Adani, from an individual investor. Please go ahead.
Thank you for the opportunity, sir. I have a fairly basic question on the technology aspect. So, what are the major differences between mass ABS and emulsion process, and what are the primary reasons why you prefer emulsion process?
So, emulsion process consists of producing HRG rubber and SAN, and then compounding the final product to make ABS. Mass ABS we don't produce, but from what we understand, it's a continuous process where a specific grade of product is produced in situ, where the rubber is purchased from outside and then dissolved into the other monomers, and finally in a continuous process the ABS is produced. What we believe is that the emulsion process or emulsion ABS process allows for more flexibility, specifically for making the specialty grades, which the Indian market does demand, and hence our preference is clearly towards that technology.
Got it. That's it from mine. Thank you.
Yeah.
Thank you. The next question is from the line of Kunal Shah from Enam Investments. Please go ahead.
Yeah, hi, hello Ravi. So, sir, we done around 88,000 tons of volume in H1. So, what is the expectation for the full year FY24 volumes?
So, Kunal, we believe that based on our capacity utilization, which is close to fully utilizing it, we are looking at this year on an annualized basis around 170,000 tons of product. So essentially, it would be similar levels of what we have seen in the first half. And going forward, I think in the investor presentation, we have even outlined what the next 3 to 4 year our targets would be in terms of capacity augmentation and subsequent sales.
Right, got it. Also, so coming back to that, the capacity expansion. So your presentation mentions that capacity is 85,000 tons for ABS and 66,000 tons for polystyrene currently.
Right.
But our production is much higher than that. So where's the gap in the understanding, sir?
Yeah, so there is of course what we have not mentioned in that is there is also merchant SAN that we are selling. So if you calculate all those three things, then it will come close to the number that we have already projected. There is also some tolling or product that we get work done outside, and there are some additional blends and products which we are also making in addition to ABS and polystyrene and SAN. So all of that putting together would be the number that we have published.
So this is something which we are making outside, and even the SAN would be made outside, or that will be at our plant?
SAN is made at our plant.
Okay, and that we are selling. Okay.
Correct.
Got it. And so again on the capex, so a lot of the capex is coming in FY28. So I think that's the greenfield. Is it mostly greenfield or there's a brownfield element to it?
This is mostly all of it is brownfield. So it is going to be at the existing sites where we already have the infrastructure or large part of the infrastructure, where some infrastructure would be augmented, and of course new plant and machinery would come in for the additional capex. And the investment or the capex is going to be done over a period of time. So it is not going to be back-ended or front-ended. But again, like I mentioned in a previous call, it will depend on once our engineering studies are completed on exactly how the capex is going to be carried out.
Right. So there is scope or there is chance for front-ending it maybe in FY27 if needed.
Yeah, so generally these projects, the way we have planned it, it will be over a period of time. So it will be spread out and wouldn't be necessarily in a single year.
So it will be in phases. Okay.
Yeah.
Got it. Great. Thanks for that. That's it for me. Thank you.
Yeah, you're welcome.
Thank you. We have the next question from the line of Ajay Sharma from Maybank. Please go ahead.
Yeah, hi. I just want to check, you gave the production numbers, so is the sales number equivalent to the production numbers?
Yeah, almost the same. There would not be major difference because we are, like I said, running at 100% utilization, and of course we are able to sell pretty much everything that we produce.
Okay, right. And then if I look at your EBITDA per ton, it kind of comes to around 18,000 rupees per ton for this quarter, whereas in last quarter was around 15,000. So I'm just wondering, is the 18,000 number kind of a normalized number, or how do you want to look at it?
Yeah, I mean, again, depends on market conditions, a little bit on product mix, and also finally, as like I said, if we are able to improve efficiencies, all these numbers can improve. So there will be a range to it. I can't commit to a specific number.
But based on the global market situation currently, how would you characterize the market? Is it kind of mid-cycle spread situation, or should we look at it?
So globally, there is, of course, more pressure on margins than it is in India as of now, or at least with us. We are in a better position than at least some economies where we are linked to. we believe that situation is likely to persist in a similar fashion going forward.
So despite the trend in the global market, you think you can protect this kind of EBITDA margin, basically what we saw in Q2?
That will be an effort, yes.
Right. And can I clarify, so all the expansion for ABS and PS is brownfield, basically?
That's right.
Thank you.
You're welcome.
Thank you. The next question is from the line of Alisha Marwala from Envision Capital. Please go ahead.
Hi, sir. Good evening. Most of the questions have been answered. Just follow two clarifications. For this year, we're expected to do volume of about 170,000 tons, right? What was the volume for FY23?
I think we have mentioned that in our plans. I think we haven't done a full entire sales budgeting process yet, but the total volume available for business is I think going to be close to 210,000 tons, 205 to 210,000 tons.
No, sorry. I was asking for if this year we're expecting to do 170,000, what was the volume last year?
Last year was around 130.
Okay. And this 210 year figures post bottlenecking, which will come on stream later this year, early next year?
In fact, for next year, because there is continuously some debottlenecking activity which is going on, which is helping us augment volumes. And of course, there is a capex plan as well, which we have outlined.
Sure. So the second question is, we did mention earlier at the start of the call that we're targeting, or based on the aspiration that we shared in the presentation, of almost a 25% volume growth, and industry growth is about 8-10%. So we're talking of going at more than 2.5 times the industry. What is changing significantly for us, because it is a competitive industry and there is significant amount of imports also. So maybe if you'd like to highlight or throw some color on what we are doing differently.
So like I mentioned earlier, that, again, between both the businesses, there are significant imports. And in both businesses, so long as there is local production, customers always prefer local production. So we are able to substitute some of the imported product with our own product. And there is ample room to have that continued growth for the foreseeable future.
While they're targeting it or to cater to import substitution, it normally comes by pricing the product slightly more attractively. So do we see that to put some pressure on our margins?
So we have done it so far and we have not seen that.
Okay. Thank you.
Yeah.
Thank you. Participants, to ask a question, you may please press star and 1. The next question is from the line of Dattatreya Chitnis, an investor. Please go ahead. Dattatreya, the line for you has been unmuted. You may proceed with your question. As there's no response from the line of the current participant, we will proceed with the next question, which will be from the line of Pritesh Chedda from Lucky Investment Managers. Please go ahead.
Yes, sir. Sir, just on the IT outsourcing side of the piece, the last couple of quarters we are seeing slightly slower growth. So, if you want to comment on the same, whereas your annual report talks about a much larger opportunity available within the global parent scheme of things.
I am not sure exactly what you mean by IT outsourcing. Can you please elaborate?
It's the second piece, the knowledge business piece.
We have not much to do with IT outsourcing. Not clear, I'm sorry, your question.
Pritesh, do you have any further questions?
Just for me, sir.
Okay.
The knowledge services business, sir.
We don't have any such business called knowledge services business.
Has he put me on the Styrenix call by any chance?
You are on the Styrenix call.
Sorry, the operator has actually put me on a wrong call. That's right. Sorry, sir.
No problem.
Thanks.
Thank you. The next question is from the line of Rushabh Shah from Dalal and Broacha. Please go ahead.
Yeah, hello. Good afternoon, sir, and thank you for accepting my question. My question is, how much is the order book for both the AlphaLand and AlphaLac, and what can we expect the order book to grow to after the capacity expansion?
So, Rishabh, typically we have arrangements with most of our existing customers wherein almost all the volume is already committed, for the entire year. We also believe that whatever capacities we are planning going forward would also be fully, tapped out by existing and some new customers. So, whatever volumes we are expecting to produce is also the volume we are expecting to sell.
Okay. And what is the average period which the order takes to fulfill to the customers?
It depends on the product. A lot of the products are fast-moving products wherein we already have stock, and normally forecasts for these products are also provided to us by our customers well in advance. So, the fulfillment can be one day and fulfillment can be a few weeks depending on the specific product, the specific volume, and the specific customer and the specific region.
Okay. Thank you very much.
Thank you. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. Sorry, this may be repetitive, but I dropped out of the call for some reason. I wanted to know revenue and margin guidance for second half and for FY25 and FY26. And secondly, how do you see the prices going ahead? I mean, are we currently in any up or down cycle with regard to pricing, or is this sustainable pricing?
So, we typically have not given any guidances, Ketan, but like I said, we are anticipating to make similar volumes that we have done in the first half, and we are assuming that the pricing would remain similar to where it is right now, and so would the margins be. So, it's going to be similar for this year. Next year, we have given an indication of certain growth based on additional capacities coming online. We also believe that we are in a good position to sell those capacities, and hence the revenue would grow in accordance with that. If you were to assume, pricing to be a kind of assumption going forward. Pricing, of course, moves by a number of factors such as raw material costs, which are relatively volatile in this market, and also with the overall demand-supply situation in the market. So, but if we were to take certain assumptions on those, then you can assume this is a baseline and the growth in accordance with additional capacities being added on.
Got it. Thank you.
Yeah.
Thank you. The next question is from the line of Dattatreya Chitnis, an investor. Please go ahead.
Good afternoon, sir.
Yes,
sir. Good afternoon. Am I audible, please?
Yes, sir. Yes, Mr. Chitnis. Please go ahead.
Please excuse me for my voice. I am senior citizen, age 76 years old.
Thank you for joining, sir.
I am an investor and I congratulate you for the very good results. My only question is this, that when you are associated with INS Styrenix, you are selling this Novadur and Luran. How much component it was of your total sale? And have you substituted those products? Because this Luran was high surface, very high quality surface, excellent chemical resistance and good impact strength, and including enhanced color sharpness and superior long-term performance. Have you substituted that product, please?
Thank you for your question, Mr. Chitnis. Overall, Novadur and Luran never constitute more than 3%, 2 or 3% of the overall volume. We have substitute products already available for those grades of products which were being marketed earlier under those brand names, and we are confident that we'll be able to do that. And in fact, we have done it already in part, and going forward, we'll be able to do whatever we haven't so far.
So what about Novodur, please?
Sir, Novodur would be less than 0.5% or 1% of the earlier business, and that has already been substituted by our existing grades.
Sir, are you trying to introduce specialty products matching to this product, which your earlier promoter had developed, please?
So we are present, sir, in several specialty products already, and we believe that there is a continued effort to do more development. We have a strong engagement with all our customers and their value engineering programs and value addition programs to continuously develop new products as well. So that's an ongoing effort, and we intend to intensify those efforts to add more products.
I have full confidence and trust because you are technocrat promoters, and I would like you to supersede the performance of INS Styrenix and better it and show them that Indians can do much better than what they have done. I wish you all the best, sir.
Thank you, sir. Thank you for your call.
Thank you. The next question is from the line of Shivran Giri from Centrum. Please go ahead.
Hi, thanks for taking my question. So, just as you were mentioning, you're going to increase your product mix towards specialty products. How much capex would you require to augment your facilities and to change them to produce these, or are these facilities fungible for the most part? So that's one question.
Yeah, Mr. Giri, thank you for your question. So most of our facilities are well equipped to produce all these specialty grades we are currently present in and also envisaging going forward. We do not anticipate significant capex as far as modification is concerned of existing facilities. The capex that we are undertaking is primarily for augmentation of overall capacity and some kind of cost savings and rationalization and improvement in efficiencies. But however, the capabilities to produce specialty and produce different grades already exist within the company.
All right. And another question is related to the why would OEM prefer the local supplier for these products compared to importing them? Like, is there a specific advantage logistically or on the other cost front? Is just that one clarification for an OEM or the custom duty or whatever that may be?
So the multiple reasons are there. I think the way the products have been used by these customers in India, there is a familiarity at the OEM level by their molders, by all their tollers. So there is a better ease of use. The products are highly kind of engineered, and it takes a certain level of skill and understanding to use these products. Once that familiarity and ease is there, there is a hesitation obviously to change too much to a different source. In terms of local supplies, we can obviously always be much quicker. Our main interest is in India, so this is our preferred choice to sell products. For some of our competitors, if they find better lucrative margins, they'll just move their product business elsewhere, and this has happened in the past. Hence, customers prefer to stick with the suppliers which are going to be more reliable and long term. So there are many reasons, all of which are difficult to enumerate over the call, but there is a preference. Even in terms of quality, we are able to provide a lot of customization, which is not always possible in an imported product.
All right, that's quite helpful. Thank you.
You're welcome.
Thank you. Ladies and gentlemen, we will take that as a last question for today. I would now like to hand the conference over to Mr. Abhijat Sinha for closing comments. Over to you, sir.
So we would like to thank everybody for showing interest in the company and joining the call. We know that we've tried to answer most of the questions, and some of the questions may have been unanswered as of now if people were not able to join the queue within the time. But we apologize for that, and we look forward to seeing you at the next call, and probably you can join us next time when the next quarterly results are announced, and we can take your questions then. Thank you so much. Have a nice day, and wishing you a happy Dussehra in advance. Thank you so much.
Thank you. On behalf of Styrenix Performance Materials Limited, that concludes this conference. Thank you for joining us. You may now disconnect your